Hello and welcome to TA for Traders. It is Tuesday the 12th of December. In this video we're going to look at the charts on Platinum, which on TradingView has the code XPTUSD. What we'll see is that the head and shoulder formation, which I was talking about at the last video on Platinum back in November, was confirmed. We've broken to the downside. We've had a terrible couple of weeks on the Platinum price. It's now looking oversold, due a short-term bounce, but you should sell that bounce. Let's look at those charts. So starting with the weekly, so each bar on this chart represents 1 week's trade, and you can see that we had this head and shoulder formation which was created with the left hand shoulder range trading through the summer period. We then had the pickup into September, creating the head, and then the final right shoulder, which we've now broken down. We've also fallen through all the supports from both the left and right shoulder. So the only support that we've also fallen through the support that was visible from December last year. So now for supports, we're looking at the start of January 2016 and November 2015. There's support levels back there, but really they don't come into play until about 840, 825. Momentum, obviously, given the fall that we've had the last 3 weeks, is negative. RSI is now down at 38.63, and the MACD rolled over. They're below zero and are looking like they're indicating negative momentum as well. On the daily, you can see that last week was atrocious for Platinum, like a lot of commodities. I did videos last week on gold and silver. I recommend you have a look at those as well. There was big falls off in commodities last week. Maybe it was partly to do with Bitcoin, who knows, but certainly big falls on reasonable volume as well. Took all the momentums became negative. However, we have become oversold. You can see the RSI is down at the 30 level and is starting to bottom maybe, and we're overextended away from the moving averages. However, you can see that the 20 and 50 has created a bearish cross yesterday. So that's a bearish scenario for the midterm. So any rally will soon hit the resistance, not only the resistance from the trading levels that we saw back in October, just above 910, but those moving averages will be tracking down quickly and will soon be below 920, giving a very putting a ceiling on any rally. MACD again indicative of negative momentum, with the short term below the longer term. Moving on to the 4-hour chart. Here there has been some bottoming, which is quite good. Also, it was positive that the RSI is in a rising uptrend. It's still below 50, so still indicative of negative momentum, but in a slight uptrend. So again indicative of a bottoming formation. We're up against the downtrend in 20 average 892.18. That's the first resistance that needs to be overcome. Above there's resistance about 903, and then we've got the 50 from the 4-hour coming in at 912.6. Looking at the support and resistance levels, as I said, the 50 comes in on the 4-hour 912.6, the 20 on the 4-hour 892, with supports coming in from the low of 8th of December 882.82, and then we've got to go all the way back to November 15, where the support comes in at 825.43. So that's been TA for Traders, looking at the Platinum charts. The key takeaways from the video: head and shoulder formation being confirmed. We've broken to the downside, fallen through all other supports. However, in the short term, we are becoming oversold. The negative momentum remains. We would sell on a bounce with further downside expected. Thanks for watching this video. Please remember the videos I do on YouTube are for information only, excuse me, and are not an investment recommendation. If you're not a subscriber to my YouTube channel, please do hit that subscribe button. Where is it? Here. And you then get email updates when I come out with other videos. I don't just look at commodity markets, I look at the foreign currency markets, equity indices, and I also do videos on single stocks in the UK and the US. Please do read the disclaimer.